Hello and welcome to Momentum Trading Group. We're now going to discuss the S&P futures contract and what we look for, how it works, some of those characteristics of the S&P. So as we've discussed in previous videos as it relates to candles and what they are, what we want to be able to look at is the overall range. If you notice on the right column here, they're broken down into quarters. In a sense, think of 4 quarters in $1, or you'll also hear them referred to as ticks. You make $12.50 a tick. So from 1995 to 1995.25 is $12.50. A half a point is $25. 3/4 of a point is 30. The difference, and then 1 full point is $1. So that just gives you a reference point, whatever, $68. So that just gives you a reference point of how they work. 2 points equals $100 on one contract. So you can just go from there and figure out how many contracts you're doing to figure a dollar amount. A 5 contract move, 2 points equals $500. And that just gives you a general idea of how the actual contract works. Now, as we've discussed in the past, we can see here that this would be considered a trend. You can see how the market had come down here, had bounced, and then it had pulled back. This could possibly be a trade, depending on where you had gotten in. This would have been our entry candle there, 1997. Would have been your stop price. So chances are you probably would have gotten stopped out there, but this would have been a little bit of a move there, a little bit of a move there, and then you can see coming into the end of the day, there's a pivot, and then there would have been this move coming into the close. This was the actual close of the market right there. So just something to be aware of when you're looking at price action is we did have this drop that was pre-market. The market actually opened in this particular candle, had come up, sold off, continued to drop, came up, pulled back just briefly, came higher, drifted lower, and then it gave a nice little bounce coming up through the highs there. Now, a couple of things that we like to use that we discussed earlier are moving averages. So if we come here and we select a moving average, the first one we like to use is a 300 period moving average. Now, why the 300? There is a particular reason why we like that. And the reason is because if you take the 30-minute time frame, again, if you're looking at these particular bars, each one of these bars represents 5 minutes, if you take that by there. So that tells me that in a 30-minute bar, there are 6 5-minute bars. And if you take 6 and you times, you take 6 and you times that by 50, that equals 300. So this line here actually equals the same thing as a 50-period moving average on a 30-minute chart. So that tells us that you can see when price broke above it through here, it had acted as a support level, drifted a little bit temporarily, and then bounced off of that. So that is a major level. If you scroll to the right, or excuse me, to the left, you'll see that a lot of times when price is above this particular moving average, or it breaks above that particular moving average, that price stays above that moving average for a while. It tends to be consistent. Same thing once it drops below it. So it can be a really nice gauge for you in just overall direction. Now, a lot of times we look at the slope of it as well. And you can see here, right through here, it is sloping up ever so slightly. And then the last week or the last couple days, last day, it's been drifting sideways. So that just gives you an idea of what the overall trend of what this would look like, sideways. Now the other one we like is we actually like to place a 50-period moving average directly on this particular chart. So we're going to go ahead and set that. And again, color, it's up to you what you like. Again, 50 period moving average. And we had covered in a previous video how to set that. So you can see back through here, the 50 period moving average is also moving sideways, which gives us an indication that the market is going sideways and it's not going up. Okay? So nice little pop. You can see how both those moving averages are flat. And then the last moving average, and this is the 50 period moving average on a 5 minute. Just to give you an idea though, so if you look right here at 1998.50, that is the price of the purple line. Now when I change it to 30 minutes, that will be equal to the price of the blue line. So if I come out here, you can see 1998.50. So this moving average, like I said, this 50 is the same line as on a 5 minute, the 300 right there. So just keep that in mind when you're looking at this, because it gives you an idea of what is the trend of our prevailing time frame. And you can see over the last little while, it's pretty much been sideways. And that's what that moving average is indicating. Back through here, it was down. Through here, it was up. But we've really just been going sideways. So just something to be aware of. Now, the final moving average that we like is a 10 period moving average. And what a 10 period moving average is this is equal to the trend or the 50 of a 1 minute. So on one chart, we're able to take 3 separate trends and compare all 3 separate time frames simultaneously. Now, what we can look for here is when we have our rules of higher highs and higher lows with a close above a candle high, like right here, like when we discuss candlesticks, you can see when it closes above that this lighter blue line, that can be a great little entry for us. Right through here, could have been an entry. We got a little bit of a pop, pretty much broke even, maybe would have lost a little bit. But again, if we would have gotten in on this candle, 1999.50, definitely would have gotten stopped out down here, full stop out loser. So you got to be careful of some of these first little bounces off here. Sometimes they like to settle out. Part of this is also part of the time of the day. So you tend to get your market morning, a retracement at some point, and then you'll get a little bit of a move towards the end of the day. So you just got to be aware of that as you're looking at the markets. Now, we can use this to say, well, we have a short-term uptrend, but we still are neutral on our long-term trend, and we're actually bearish on our intermediate trend, or what we'd refer to as our primary trend, which is the 5-minute chart would be the 50 here. So, and you can see how they leveled off, but they did give us a little pop here at the end of the day. So we could have had some potential of capturing some more trades, but this is a really good indication. If you actually come back through here, when price is above the purple, like this, and you get price action like this, this is a good little move. That's a 4-point move there. Again, it pulls back into here. You get a right there. You get a higher high, higher low closing above the moving average. Good little pop there. Again, that's going to be a little over 2 points. So that's another good little move that we can get. Now, once you get into here, you see this particular candle, equal low, higher high, closing above candle high. That's not a trade. Okay, remember we got to follow the rules. Right here, lower low, higher high, closing a candle high, not a trade. Okay, so just be aware of that. Now this candle here at 8:15 would have possibly been a trade, but it's basically 10 minutes before the market opens, so we don't take pre-market movements. Then you can see what happened in the pre-market there. So just something to be aware of. Now, where you could have taken a trade here short is, notice how this does follow the rules to the downside once it's below the 50. So we could have taken this short and possibly could have caught some of this move. Now, depending on what this looked like here, you can see this candle here, higher highs, higher lows, closing equal to or at the candle high, breaking the 10. That would be a buy signal, so you could have possibly gotten this trade back to the upside. This trade, not great. This trade could have been okay, even if you would have gotten in here in 1999 there. You would have been full stop out loser right down here on that. So would have been a loser, but then we would have caught this trade right here at the end of the day, 1999.25, and it went to 2001.75. So looks good. Looks good. So just be aware of that when you're looking for these movements on what they're doing, and then also comparing them to the other markets to make sure that we've got all the wheels in the bus actually moving in our direction. So again, when we're identifying price action, moving averages can tell us trends. You can see with the purple line and the blue line going sideways, we've got a sideways trend. That's why when this went up, it did pull back. So just be aware of that when you're looking at the overall trends, or what's the slope of those lines there.